Okay. Um, Good evening. Um, Divergence in trading. I would explain a little bit before I share my screen, then we just go quick into the practical. So basically, divergence in trading is it's like the term divergence is a how will I put it? Is a false indication to trap traders is basically the market trying to trap traders, and we have three form of divergence. We have bullish and bearish divergence, then we have hidden divergence. So when they mean a false indicator to trap traders, is mostly divergence mostly happens with divergence mostly happens with people who use indicators more. It does happen in chart pattern, but it mostly happen with indicators more. The market tries to confuse and conflict people who uses indicators, technical indicators. The reason being it is that the market makers have already seen indicators like a form of a cheat, because while you are there as a traditional trader trying to be more technical with what you see in the market, there are people that with certain algorithm and certain strong indicators, they just look at the chart 10 minutes, 20 minutes, and they know the key things to do and it works for them. So the market basically uses these indicators to trap these people. Now, in terms of what, how does he use these indicators or chart pattern to trap people? Is it gives you that the market is doing this, whereas what the market wants to do is different. Market can You can start seeing a higher high and lower high and be thinking this is an uptrend from 1 hour, from 15 minutes time frame. This is an uptrend. You'll be looking for where to buy. But guess what will happen when you start buying? Market may move forward a little bit. You might probably see profit, or you might not even see profit. Market can just play around your entry, and then the next thing, a strong sell will follow. The sell might not just most times might happen as a result of a strong supply in the market, or might happen slowly. You will just be seeing minus something, then the next thing you start seeing your stop loss will hit and you start seeing aggressive movement towards the opposite side. The big banks, they know that if they create this divergence, it will bring a lot of money inside the market for them to liquidate. So what they do is they start taking bulk, not bulk trade. They start taking some specific amount of trade towards one direction. Retailers will then follow. Retailers now will then help them to create a specific pattern in the market, probably a mini form of an uptrend. You start seeing higher highs, lower lows. You would think this is an uptrend. And then they will bring their main trade in to trade in an opposite direction. That is what divergence is. Bullish divergence is markets would create a form of like this thing. How should I put it? Uh, Give me a minute. Market will create like a form of yes, in bullish divergence, market will create like a form of uh downtrend. Then the next thing that will follow, how we will know it's bullish divergence, is the chart pattern. Most likely, the next thing that will follow is a bullish movement, and a bearish divergence is still the same thing. Market will create a form of a mini uptrend, but the next thing will follow. It's a bearish movement, and oftentimes, yeah, this divergence is being followed with a significant movement. So it's either supply or demand, or we'll just say a big move. So there are ways to avoid this divergence, and we'll go into it. Then in terms of hidden divergence is markets may be forming, let's say markets can be forming this divergence, hidden divergence. The reason why the word hidden is there is most likely you can spot it, most likely you might not spot it, but at the same time the reason why it is there is because the reason why it is hidden, sorry, it is because it is continuation. Let me come again. Sorry, I did not prepare for this specific divergence, so I would be repeating myself so that I will be able to construct my words better. For bullish divergence, if you see a bullish divergence, what will follow after a bullish divergence is a potential uptrend. A bearish divergence, what will follow it is a potential downtrend. So what a bullish divergence is market forming a mini downtrend before the main move will follow. Let me put it this way. Market can be in a downtrend. Now, when you notice, like the previous time that we talked about market coming a market coming to the end of a trend, like market coming into the end of a trend, then what you should be expecting in mind is a bullish divergence. We can call it a reversal continuation, but what you should be expecting is a bullish divergence. But the reason why most likely you need this thing is for you to be able to understand how chart can play you. So like I said, when a trend is coming into an end, what will follow is a bullish divergence. If a downtrend is coming into an end, meaning a potential uptrend. Then if an uptrend is coming into an end, what will follow is a bearish divergence, meaning a potential downtrend, a strong opposite move towards what traders are expecting. So in a downtrend, people will be looking for you to sell, people will be looking for you to sell. But you understand the term divergence, you are spotting where this possible divergence could happen. You are being careful. You can either do sniper entry, which I don't used to advise. If you don't want to go to the village, I don't really advise people to do sniper entry. You know me, I'm very realistic with this financial space. Then wait for your divergence to probably happen with your first candle or your second candle before you find an entry. Now, the term hidden divergence is for continuation pattern, not an opposite move. So when you spot a bullish hidden divergence, know that what is hidden divergence is often like it often happened in a pullback. Like if you are saying markets is having a pullback or a reversal, a retracement, you understand what I'm saying? Or we can use the term correction. Market is correcting. So imagine market is in an uptrend. Let me share my screen because I think I have to just be demonstrating this thing on screen rather than just wrap it out. So I think I have to be approved. Okay, yeah. Okay. Please, somebody should confirm if my screen is visible now to the meeting.
Yeah, it's visible.
Okay. Now, let's
Bless you.
thank you, sir. I don't know whether not King Charles they call my name. Let's make I sneeze first.
Inside in bedroom.
Hey, ah, uh, Okay, let's use this GBP USD chart again. I've not even done any form of analysis for the past 2 days. Me and this market, we've been having a little bit of distance relationship for some days now. Okay, now this is my chart here. Let me use this term now. Let me start from this daily time frame. But you see what we are saying here. This is an uptrend. This is an uptrend. Now, this is a reversal. This is a reversal. And where we can say there is a bullish hidden divergence is if there is a potential continuation of this uptrend. That is a bullish hidden divergence. There is a potential continuation of this uptrend. The reason why it is bullish hidden is because on the lower time frame now, on the lower time frame, what you are seeing here is a downtrend that brought it here. A downtrend that brought it here. So now, if a normal bullish divergence, we can say, okay, after this downtrend, as the downtrend is coming into an end, what we are expecting is a bullish movement upward. That is where we can say, okay, a bullish divergence is about to happen. Meaning there is a downtrend. This on these 4 hours right now, this is a downtrend. The reason why it is bullish divergence is it is an opposite movement. As a trend follower, when we say, okay, follow the trend, as a trader, also know when to not follow the trend. That is what divergence is trying to teach you. The term, the English word divergence is diversify, or know when to try another thing, do opposite thing, and all those things. That is what this trading term divergence is. Following the trend, follow the market, follow the market, follow the market. Know when to wait and do something different. So if we are so, okay, follow downtrend. At this spot, okay, you will now come to a conclusion, especially if you are using an indicator, you can come to a conclusion that you are waiting for a bullish divergence. Oh, market is about to have a bullish divergence. What I am looking for right now at this era is a bullish divergence before you take your trade. Now, a hidden divergence is if this downtrend will continue. If this downtrend will continue, it will now be referred to as a bearish hidden divergence. Because why? You did not see that divergence. It's very difficult to spot. So while we might be waiting for a bullish divergence here, this downtrend can actually continue. That is why I say a hidden divergence is a continuation pattern of the current trend. So this will now be like a normal reversal. After a retracement, what will now happen is a bearish hidden divergence. But now this is very, very confusing. This is very, very confusing. If I'm being honest and realistic, nobody actually understands what I've been explaining since. If you understand, please respond. So I believe most of us does not understand. So I would use a smaller time frame. Probably market will be more visible and clear. Then, okay. Now, yeah, let's start with the term divergence here. This is a downtrend. At this spot where you notice the trend coming to an end, what you are expecting here is a bullish divergence. That is the simple term for it, meaning an opposite movement to the current trend. On 1 hour, this is a downtrend. Let's forget the trend on the higher time frame right now. On 1 hour, this is a downtrend. The reason for divergence is to be able to gain a certain level of precision in your entry. That's the essence of knowing divergence. So At 1 hour, we can say, oh, we are expecting a bullish divergence here. You see it now. And guess what? There is a bullish movement here. There is a bullish movement here. And if the downtrend then continue, what we cannot say happened here was not a bullish divergence, but a bearish hidden divergence. The reason why it is bearish hidden is because the divergence is meant to continue the downtrend. But what it did was to manipulate the market, to liquidate people who are potentially buying. Let me probably type. So the thing we are expecting here is we are expecting a bullish divergence. But at the same time, market can give us a bearish hidden divergence. So the term knowing divergence is knowing how to be careful with your entry, having a double mind and all those things. That is what I personally use it for. So if we come, let me even just make it easy. I just need an image illustration because mm, okay, you can see this thing here, this illustration. We'll spot it in the chat, but let's look at this because I don't have the time to draw this thing. So we can say a regular bullish divergence is when we say price forms new low. The movement is the movement after this. If you notice, this is like a form of a downtrend, but the movement after it, it's an uptrend bar. Then hidden bullish divergence is a like price forming an higher low. Is this thing correct? Yes, price forming an higher low to continue the trend. This is exactly what happened here. Oh, how do I push this thing forward? Okay, this is good. This is what happened here. Let me find 2 hours. This is a lower high. This is a lower high. This is a lower high. But at the same time now, the price has not formed a new low here. So we cannot say there is any hidden divergence here yet. I don't know if is anybody understanding this thing? Please, if you are understanding me, just type something in the chat. Okay. Yes, back to this. What we are practically learning divergence for is to know when the market is trying to deceive us. So now, what we are going to just do is instead of me explaining much and much and much, is we are going to be looking for it in the chart. And divergence, I mostly look for it on 15 minutes and what 1 hour, 15 minutes and 1 hour. So right now, from 15-minute time frame, This is an uptrend forming in the market. This is an uptrend forming in the market, right? And now, yeah, if this trend continue from here, if it continues from here, if it does continue from here without breaking any of these low here and all that, then this can be said to be a hidden bullish divergence here. But now coming to the reason why it is called hidden is because it is continuing this uptrend that is starting here. Then, if we are looking at it from the higher time frame, what is happening here is a bullish divergence, not hidden. I don't know if you get it. From the lower time frame, we are paying attention to this downtrend here because it's 15 minutes. The current trend on this 15 minutes here is the downtrend. Remember, in trading, while we're looking at the past history, what we are paying attention more to is what happened before the recent thing that is happening. So if we're on 15 minutes, the recent thing that is playing out in this market is this down movement here, this down movement here. And if we now look at it from this angle, what has been happening here is a form of an uptrend on this 15 minutes that has been happening here at this area. So what we are seeing here, is basically a bullish movement here on this 15-minute time frame. What we are seeing here. Now, someone will ask, you might probably ask, oh, if it's a bullish movement, the last high has not broken this one. Yes, it does happen. We'll come to that aspect. Not every time in an uptrend or a potential uptrend, the market will form a new high. Sometimes this high will not technically break this other high. But if this market should move upward again, we are still in an uptrend. Even though this previous high has not broken, we are still in that uptrend. Till a new trend formed downward, this is an uptrend. So right now, what we are seeing here is if an uptrend continue to break this place, it is called what? A bullish hidden divergence. But if this downtrend continue, then we then come to 1 hour time frame. And what we are seeing here is a downtrend on 1 hour time frame. And this downtrend continue. What is happening here is a bearish divergence. Then that is just it. Is there any question so far? Hello? Is there any question?
Oh, no questions, I guess.
Then, if I am being honest, genuinely as a trader, I mostly don't trade with divergence because people who do it are people who use this indicator more. I mostly don't trade with divergence. The only kind of divergence I use is just bullish and bearish. I don't use hidden divergence because I don't have time to be thinking too deep. The market is trying to trick me. It creates a certain form of anxiety for me to click my button and take a trade. This is my own personal trading psychology. I really don't pay attention to hidden divergence. It makes you think, okay, what if the market is trying to play this trick on me? What if there is an hidden divergence here and all those things? And the next thing, it creates a form of anxiety for you not to take your trade. And there's this thing in trading that if you miss a potential trade and the market end up playing as you predicted, there is a high chance that your next trade will be so risky for you to lose money because you are now trading somehow. A subtle revenge is there because you missed a trade. So I firstly don't expose myself to an opportunity, to a point where I will miss an opportunity. So I would strictly just explain how I use divergence and the only kind of divergence I use, which is the bullish and bearish divergence. And what do I mean by that is I look for where market is trying to form a new trend. Then I would know, oh, this is like a bearish divergence. And what I mean by that is what is happening right now here can actually be a bearish divergence. What is happening right now? Market is trying to form a little bit of an uptrend at this area. But if this market then break this last support, it proves my point that this is actually a bearish divergence, meaning market is creating an opposite side movement to trick people. So what a divergence is basically, is there a way I can get a plain this thing to draw on this meeting?
Yeah, now we can open the whiteboard, but I think let me see.
Okay, let me come to this spot here. Let me come to this spot here. I think there is something I want. I'll just use this point here to explain what I want to explain. Okay. Now, you see this point here, this on this 1 hour. I don't know. Let me find it. Let me mark it so I can spot it on the lower time frame and show you what I mean by that. Okay, this is exactly what I need to explain this thing, probably to a point where everybody will get it. Now, you can see what is happening here on this 15-minute time frame. This is like a subtle uptrend movement. You can see markets progressing from this support. Market started progressing higher from this support on 15-minute time frame. Market started progressing higher. People will definitely trade this because this is a big movement. From year to year would give you a profitable trade and all that. Market started progressing higher. But at the end of the day, what follows it is the continuation of a downtrend, of the downtrend. Mm. So this is basically, this right now is a divergence because why? Market was forming an opposite movement to what was happening. There was a downtrend. So this retracement here that market was doing is a bearish hidden divergence to continue the downtrend. It's a bearish hidden divergence. Or we can just say, let's remove the hidden. Just have it at the back of your mind. There is something called hidden divergence, but let's not go into it to complicate things. Let's focus on just bullish and bearish divergence to make things less complicated. This can set to be just a bearish divergence. Remove the hidden. The reason why this is a bearish divergence, this as a trader, when you find yourself in a situation like this in the market, from a downtrend, market started forming a subtle higher high and higher low from a downtrend. You should be careful, especially if the next highs are not breaking this one. If the next high are not breaking this one, there is a potential that this what was forming here is a bearish divergence, meaning the bearish trend that brought the market here. But if the market then progress from here and continue upward, continue the uptrend upward, then what happened here was a bullish divergence. What happened here was a bullish divergence. So how do we know that something is a divergence before it happens? It's what you've already saw before the trade. So having determined that something is a divergence before it happened, most times is you predicting that, oh, this is a bullish divergence. Because why? My other factors of confluence, I said this, I said that. So let's assume you are analyzing trade, you are on a downtrend, and you notice market is not anywhere close to a support or a potential area for reversal, and you start seeing things like this, you can then come with the sentiment of this is a bearish divergence, meaning market is trying to form an uptrend to trick people to buy. Let me wait for an opportunity to sell instead of joining the buy. You get now, that will keep you safe. So knowing something is a divergence before it happens is you already analyzing the market. So determining something is a divergence is you trying to identify if market will do an opposite movement of what it is doing currently. The main move of the market is an opposite movement of what it is doing currently, or not what it is doing. Or so you can see a subtle uptrend, but what you are looking for is to sell, not to buy. That means you've been able to determine that small uptrend, that mini uptrend that is forming on 15 minutes or 30 minutes time frame is a bearish divergence. But if you now find such at the end of a trend, a support, probably a strong support area, you can then say, okay, market is trying to form a bullish divergence, meaning market is trying to reverse from the downtrend it was. But if you then say, okay, market is trying to form a bearish divergence, but this is what you are seeing, then you are saying, okay, basically, let me put it this way here. Let me put it this way. I'm trying to simplify these things to you, but as time goes on, you understand that this thing can be tricky. But the simplest way to understand it right now is this right now is a bearish divergence. Whenever you see something like this, is a bearish divergence. Does it mean that markets cannot progress from here and progress higher? Yes, it can. That's the reality of the market. Anything can happen. But this is a bearish divergence. When you see something like this in a downtrend, most especially, when you see something like this in a downtrend, it is a bearish divergence. Then if you see a form of bearish movement, a form of subtle downtrend, when the main trend you are looking at is an uptrend, then what is happening there is a bullish divergence. This is a bearish divergence. This movement is bullish, but the term for it is bearish divergence. But this movement we are seeing here is a bullish movement. The reason why the term for it is bearish divergence is because the market is creating a subtle move to deceive you. So whenever you see a bearish divergence, what will follow is a potential downtrend. Whenever you see a bullish divergence, what will follow is a potential uptrend. How do we spot a bullish divergence? Is when market is forming lower lows and higher lows. When market is forming lower lows and higher lows as a trend inside a main trend. If you are writing it down, this is your proper definition. A bullish divergence is when market is forming lower lows and higher lows as a trend in an uptrend. Like, there is this thing of there is a smaller structure in a major structure. If your major structure from 4 hours, 1 hour are, if your major structure from, remember, divergence is an end, is used trying to spot an area of entry, what to do with the markets. So if your main trend from 4 hours, 1 hour is an uptrend, and you spot a lower low and higher low movement in 15 minutes, 30 minutes, or 5 minutes, as a forex trader, 5 minutes is important to you. Is a downtrend now in lower time frame, like 15 minutes, 5 minutes, and all that. What that is to you is a bullish divergence. So you will not come and jump in to be trading that downtrend you are seeing on 15 minutes and 5 minutes, while your 1 hour and 4 hour is an uptrend. You will not be trading that downtrend. If you want to trade that downtrend, you will trade it as a scalper, or as a gambler. So what you should be looking for at that 15 minutes, 5 minutes, because you are seeing lower low and higher low, know that there is a potential uptrend to continue what was happening. So that tells you that that small downtrend you are seeing on that lower time frame is what a bullish divergence, vice versa for the bearish divergence. And that is what we are seeing here. If you come on 4 hours now, let's come on 4 hours. Let's come on 4 hours. On 4 hours, yeah. Okay. Now on 4 hours, does this look like a trend for you? This does not look like an uptrend. But if you, on 15 minutes, this was a sub to on uptrend. You see what I'm saying now? The general move here on 4 hours was a downtrend. But when you then come to 15 minutes, that was a sub to uptrend. So you get it now. Bullish divergence is when market form lower low and higher low, but there is a potential uptrend that will follow that. Then bearish divergence is when market forms a higher high, like this one. Here is this. Oh, my network is really, really slow. Okay. See now, a bearish divergence is when markets start forming higher highs, higher lows, but what? There is a potential downtrend that will follow. That is the term divergence. So I believe we all understand. If you have any question, please ask. If you have any question, please ask. Okay, so there is no question. Please, if you are not in a busy place, you can unmute yourself. There is no question, my guys. So everybody does understand this thing, yeah?
Mr. Destiny, good evening, sir.
Evening.
Please, sorry, quick one. From your explanation, it's like one cannot just, divergence is not something you can bank alone to say you want to take a trade based on divergence. Because you mentioned other components, and from even the explanation, It's not something one can just say, okay, you're taking your trade based on your bias for this kind of divergence without the other consequences.
I don't think this is the question. You answered yourself already, but
Okay.
let me explain it to you. Divergence is a factor of confluence, an additional form of understanding to your analysis.
Uh,
You get now?
yes.
An additional form of analysis, understanding to your analysis. Let me say, for example, now, on this market, what we are seeing here is a downtrend. What we are seeing here is a downtrend. What we are seeing here is a downtrend. So what we are looking for now is where to sell this market. So if we then go on 15 minutes time frame, because other form of our analysis has told us that, okay, if after doing your analysis you've understood that, okay, you are on a downtrend, what you are looking for is to sell. And mind you, market is not close to any key level from the higher time frame that you should be paying respect to, that, okay, the downtrend may be coming into an end. You understand my point?
Yes,
If
sir.
if market is close to any of that, and then you then arrive that, okay, there is still chance to sell this market down to this specific support. So what I'm looking for is to sell this market down to this support, for example. Then you come to lower time frame and you are seeing higher highs and higher lows, which that indicates an uptrend on lower time frame, like 15 minutes, because what you are going to 15 minutes to look for, 15 minutes or 5 minutes, what you are there to look for is entry. But going there now to look for an entry, then you saw higher highs and higher lows, which is a sub-2 uptrend. But what you had in mind from analyzing 4 hours and 1 hour time frame as a day trader or as a swing trader is a sell trade that you have in mind. What that will not tell you on 15 minutes and 5 minutes is what is happening there
Mm.
is a bearish divergence. What is happening there is a bearish divergence. And that can be what is potentially happening to JBP USD, despite it already coming to the end of its trend, because it is at a key level from the daily time frame. But you as a trader, knowing that there are chances that not key levels can be broken, market can get to a resistance and decide to break the resistance and continue the trend that moved it to that resistance. So you having it in mind that market can be at this support right now and decide to break the support and continue this downtrend. If you are so confirmed that that is the move you want to take from other analysis and all those things, what you should be seeing this as on 15 minutes time frame is a bearish divergence. This move here now is a bearish divergence to you, because even at the end of the day, the uptrend here, market has broken it. So this signifies you to take this to continue the sell that was on this higher time frame. You see how basically, as a trader, despite me knowing that the downtrend is at a key level from a daily time frame, but I know that key levels can be broken or can just be broken to liquidate people. Coming to a smaller time frame, seeing this thing, oh, this is a bearish divergence. So what should I do from this area? As market has broken, if there's a retest or anything, I can take a sell trade and continue the selling, putting my stop loss here, around here. That is it. So divergence is like a factor of confluence. It helps you to be wise, like to be more better in your entry. Because imagine divergence is not a thing to understand. You can just open this chart. Oh, this is an uptrend from this 15 minutes. Let me join the uptrend. Imagine someone that took a buy from here, because this already is a support and an order block. Let me put it for example for you. This place already is a support as an order block. Or people that uses trend line. Someone took a buy from here now already. They will be getting liquidated. You see how it is. So divergence is like a factor of confluence. It helps you to understand that. It helps you to understand that what is happening and be market just taking its time to do something different. Now, for those that are using indicators, how you understand divergence from indicators is when your indicator is saying down, your indicator is signifying downtrend, market is bearish. But what you are seeing on the chart is a subtle uptrend movement. Then that is a bearish divergence. Let me try. Okay. Oh, I can't add more indicators to my charts. I don't think so. Yeah. But this is it. If you are using indicators, which I don't think in this our curriculum there is no much of indicators in it. But if we ever get to that point, I would explain this divergence for you. Is if your indicator is signifying, let me even show you. If your indicator is signifying a downtrend, and what you are then seeing on the chart is a subtle uptrend like this, what is happening is a bearish divergence. So that is just it for today, for the divergence today. Hey.
Okay, Mr. Destiny, thank you.
Yes, I'm quickly just taking this opportunity to look at Bitcoin. Let me know.
Give us signal.
I might not trade it, but I'm just trying to know what the market is doing at the moment. And what I can just see here from this area from Bitcoin is like a sideways movement that is trying to do. Market is just trying to stay sideways for now.
So Bitcoin tapped 123K. Wow.
Yep. Okay. So
That's massive, bro.
this is sideways. This sideways now will allow other coin to move. Solana 177. Been a while I traded Solana. Yeah. Sideways movement to allow other coins to move basically. So yeah, market is a potential sideways. If we just break this area, then we might probably be looking at markets a potential downtrend coming in to break this 166K. But I just think the market will be moving sideways for now because other coins need to move. Basically, crypto is more of sentimental analysis. The only thing I'm saying here, instead of me to look at chart, the only thing I'm saying here is just an understanding that because the price has formed this new all-time highs 123K. Most investors will not be pumping in money, like retail traders will not be pumping in money like that because everybody scares that Bitcoin is at its peak. So people will face other coins that have not been moving since, like Solana. You saw Ethereum has been posting like this thing. While Bitcoin has been moving that sideways, Ethereum managed to move from 3,000 to 3,500, and Bitcoin has still been sideways. So there will be low inflow of cash money into Bitcoin and higher inflow of money into other coins like Ethereum, Solana, and other ones, because people, most crypto traders and all that, will think Bitcoin is at buying right now or longing right now is at higher risk. Let me long the ones that have not moved. That will not make these ones start moving, and that's just crypto for you.
Mm.
That's why you can see difference in these charts, in these two charts. If Bitcoin is to fall right now, crash right now, every other one will crash. But as long as it is sideways, other markets has room to grow. They will not move, they will not consolidate with Bitcoin. As long as Bitcoin is stay consolidating, they will not consolidate with Bitcoin. They would,
Mm.
you know, pump. But if Bitcoin has to crash right now, they will crash. But as long as Bitcoin stays consolidating, they will pump.
All these crypto pairs, they have almost, if one is like if Bitcoin is buying, definitely it's as though Ethereum, BNB, all of them will be buying at the same time.
Yeah. It's like that. The reason, but not there are crypto markets that has negative correlation sometimes to Bitcoin, and even sometimes even Ethereum has negative correlation. There are days that Bitcoin is probably pumping Ethereum, Solana. They are just consolidating, or they are just there. So
Mm.
it depends on the season, depends on the period, it depends on the fundamental analysis also. It's just like that. Like right now, the reason the thing is, the general sentiment of the market is Bitcoin was at 23K. Most of the markets, they did not pump that much. But the moment it started moving sideways, it started dumping, people started moving their focus from Bitcoin to other coins, hereby now pumping all these other ones. So these down movements now and this subtle consolidation that is happening on lower time frame of Bitcoin, you are not finding it on Solana or Ethereum. What you are still finding on Solana and Ethereum is an uptrend. It's not consolidating.
Mm.
That's just the sentimental analysis on crypto. The moment you find Bitcoin consolidating, especially after an uptrend, and you then notice that other coins did not really aggressively pump with Bitcoin while Bitcoin were pumping, your focus now is to find an entry to long most of those other coins, because they will definitely move.
Mhm.
Yeah. So I believe this is it for today. Yeah. At the end of the day, have it in mind that divergence is market just trying to give you. Yeah.
Okay, so is there any question? Not only based on what is taught today. If you have any question at all, you can answer. All right, so if there is no question, we can call it a day. But I hope we're learning and we're understanding what is being taught. All right. Thank you so much, Mr. Destiny. Although it was impromptu, but you still delivered. Thank you. All right. Have a good night, everyone.
Okay.
Yeah.